This is Justin Pulitzer. This is my weekend video for the week ending November 9th, 2014. A lot going on in the markets. Let's jump in. As you can see, the market had a substantial pullback and a even more impressive rally back considering we're at new highs. We had a Japanese liquidity event here that really brought the market up. We are now into fresh air. I will note that we are about $8 away from the 20-day MA, which is kind of a lot. Usually $5 or $6 is kind of the max, and we are majorly stretched. That doesn't necessarily mean the market has to roll over. It does necessarily mean that we are extended. So I'm thinking that we can still be in this melt-up mode, but possibly have some type of a pullback into range somewhere here, and maybe come back down, and maybe we want to retest the 50 and the 100 MA on any weakness. That said, we did have a lot of consolidation here with dojis up at the top. I was saying that this was Super Mario Land Doji Edition because we were waiting for some information from the ECB and Draghi, and that seems to have resolved higher. So the fact that we're coming from a new high still means now we're again in buy the dips mode. And let's take a look at another one of the indexes. If you take a look at QQQ, that is even stronger. We gapped up and we've held, and we're just in this this sideways flag type of a consolidation. And I would think that any type of a pullback here probably has a bit more of a severe liquidation break because we're up in this consolidation area, and we could easily pull back into that 50 and possibly even into the more mid-range here. It's also conceivable that we break out and extend above and just have a melt up into the end of the year. If you do take a look, I want to just flip back to SPY for a minute. I took the liberty of figuring out some of the Fibonacci extensions. The 1.272 takes us up to 207s, and the 1.618 takes us up to 214. So that is quite a bit of a run. Maybe we do finally get this type of blow-off action in the market and put in a major top. But until then, we're just kind of grinding higher. This action here isn't exactly super blow-off-ish. Take a look at IWM. I had discussed that last weekend, that I thought that the break of this downtrend meant that the short was kind of off. You could see we kind of tested below range. Here we actually closed below, but then came back up. So this is a little bit less strong. And, in the past, I've been discussing this 117.37 as a level that isn't sustainable, anything above there in the IWM. And you could see this day, which was the top, was to the tick, 117.37, and then we backed off. So this high to me is very important. If we can get above that area, I think we do have a test up to the old all-time high and to close to 121. And then you can see we've had double tops there, so possibly we do get some type of a blow-off action there. If not, I'd be looking for this to kind of come back and retest this trend here that broke. And now that we're above it, you can see we kind of blew through it. I would think somewhere in this area of the prior 61.8 and the backside of this trend line here, to me, I think would be the first line of support. And if we break down there, maybe into the 113s. But do keep in mind, we could blow up through here and get back through that area. One of the things that's been keeping the NASDAQ as strong as it's been is Apple. I think everyone knows this. This stock had this gap up here for earnings and has just been, since then, it had this rally and then has been in this upper channel. And you can see up here, anything above the upper channel has not been sustainable, and we've had severe pullbacks. I had actually choreographed that I said 103s were going to be the high, and we stayed above there a little while and pulled back to the channel low, and we're in this chop mode until earnings. And we had this breakout over the kind of intermittent channel line, downtrend line, and then we've now been rising. And I had discussed the 109 level. I've been saying that if we broke out above this high, we would see 109s. We actually saw 110s, and we've kind of been in this chop pattern. The stock is looking kind of bullish to me because it hasn't pulled back, but as we've seen here, we can sustain a few days over there before we have a bit of a harder break. I think Apple is a little bit of a wait and see here. I would like to see a retest of the breakout since we haven't seen that yet. Excuse me. Anywhere that would be a breakout, a retest of that breakout close to the 103.74, I think could be a buy the dip situation if it holds. If not, we may come down a little bit lower and test the channel low and possibly below it. You can see we have tested below there, and that has also been unsustainable. So the channel is kind of a good guide. It's a little bit iffy sometimes at extremes, but holding price above or below there becomes a little bit harder. That said, if Apple does break over this 110.30, I think we could see some really off to the races type of move, and this could have some type of a blow-off. That's not really the way Apple tends to move. It's kind of like grinding because it's such a heavily watched stock. So that's what I'm looking for, really. A move over this 110.30 for possibly some type of a blow-off action. I would probably play that. And possibly a breakdown here to rebuy. This is really what I'm looking for, of 103.74. I'd love to buy a retest there, and it would be close to around the 20 MA. Apple tends to, when it's bullish, hold the 20 MA. When it loses the 20 MA, it tends to get a little bit more bearish. Another one I had been talking, I had kind of been bearish on this stock initially on the IPO, and let me get rid of that. You could see my cause for concern was correct, and the stock came down quite precipitously, this BABA. But I had also said that once we got back over the IPO high, this is not relevant anymore, once we got back over the IPO high, I thought that the stock was in play and played it long. And I had said that I thought we would make a move to the 100 level. We got pretty close here, and then we wound up chopping. And then I had discussed that on earnings that we might want to play it flat. I did play it flat. I took some profits here for a bit of a nice gain. I had played it with shares, and I had also played it with some risk reversal call spreads, which I had taken off. I discussed that a little bit on the stream. And then I had discussed anything over this high, this 102.80 was a go with. And I had discussed hitting the 161.8 fib extension, and we got that to the tick here with this move. There was a subsequent back off. The stock has since rallied through, and it unfortunately has done it without me. I'm a little bit disappointed about that. But BABA is showing some pretty good relative strength. There is a move that's coming in the next few days, the Singles Day. It's a big event in China. I would be thinking that BABA has been being a play into that, and I would kind of be looking to kind of, quote, sell the news with that move. I think the date, I have to double check. I think it's between 11:11 and 11:15. I'll post that on the stream a little bit later. Sorry I don't have that for the information here. It's not like the Fed, where it's a commonly known U.S. thing. But I do think that BABA is probably a bit of a sell the news into that. And if there is some type of a pullback, I'd be looking to buy. I do think that this stock is pretty bullish. It probably hasn't seen its quote-unquote all-time high, although it might see some type of a pullback. I'd say that the next few points are probably to the upside, but it is looking quite extended to me here. I mean, you can see multiple days up. You had a little bit of this consolidation, but now we've moved pretty fast. So I'd be looking for some type of a pullback in BABA rather than chasing it here. Other ones that I follow quite a bit are Facebook. I had said that I thought that this was getting a little bit cray-cray here. I had been looking for 80 and maybe even 85, but I did not like that when I asked on the stream how many people were playing Facebook long, everyone who answered said that they were playing it long. And I had said after hours here, once they reported, that once a stock cannot go up on good earnings, and they had good earnings, I know everyone is saying that their expenses were higher, and that's what caused the precipitous drop. For me, it's always price is truth, and the why isn't as important as the what. And the what here was the price. Price could not go higher. The stock had already run, and the only place to go once a stock can't go higher, a momentum stock, is down. and I had said even in the after hours at 80 that it was a sell, and the stock has absolutely, I wouldn't say absolutely plummeted, I'm being a little bit dramatic here, but the stock has had a pretty healthy pullback. It has held trend here, though. That is very important to me. It's held the backside of this breakout. There was a little bit of dangling stuff here to the 100 MA. Actually, this is where I had discussed in real time where to cover the short, and wow, did that look pretty smart, because the stock has rallied since. But you can see here, I'm going to get into some really nasty type of day trader and swing trader stuff. But if you take a look where the rally stalled. It could not get back up over this bar's close. This is the body. This is what's important. It could not get there. It failed. It came back up. It still could not get there. Here we got almost up to here, a little bit below the gap, and then pulled back precipitously, and it's just been in this kind of chop range. I think that this is a bit of a bear flag. I think momentum in this stock is waning a little bit. I am bullish on Facebook longer term. I think the stock has not seen the all-time high, although I do think it's possible that the stock may have seen the high for a little bit of time. To negate that thesis and to get me long, and you can see I have alerts set here, if we take this dump bar high, which is 76.80, I do think we will fill the gap. And I think we'll fill it pretty quickly, because you'll have had multiple days of consolidation, and then once you take this high, I think you'll get back up pretty close to the close. If not necessarily to the close up here, but I do think you'll get back somewhere into this breakdown range. And the low of that is, let's see, 79.57, and the high, as we can see, is 81.16. So let's be looking for that. If we break, where are we going? If we break this, the trend here, I think that there is room to come back down here and maybe test the lows here of this 70.72 to fill up the triangle, so to speak, lower. And I think that the screening buy for me for a bounce would be somewhere on this 200 MA. It's come up a little bit higher, this 68. This has been reference support in the past. You can see over here, this was kind of the breakout. So if we came back down there, I think you would take back a lot of the move, and I think that this could set up for a bounce. See, the problem for me up here, if you take a look, is that this high of day, this gap, this 76.74, once we lost that to me was a little bit more bearish, and you can see we've kind of stalled out there the last two rallies. If we can get back above there, I think the stock, as I said, is more healthy. Anything below there, I think, is kind of like a wait and see, and you can see we stalled here at the 50 and the 20, and the stock is kind of just chopping. I think there's a lot of complacency. I think a lot of people bought up here and they bought wrong, and they're sort of just hoping and praying that they get back to even. It may happen. Like I said, I'm bullish on Facebook. I think the quarter was okay. I just haven't loved the price action the last few days. So let's watch for a breakup over this high. This was the, or let's do the earnings gap high, 76.88. Anywhere between 76.88 and 76.80, I think the stock will carry higher. Anything below this low, and I think we're going to come back and retest the 70 and possibly the 200 MA. It's been quite some time since we tried there. Twitter is also another one that I had been playing bullishly. I had gotten stopped out, unfortunately. The stock, we're doing well. I mean, taking profits along the way. I mean, this was by no means a debacle. I had been long down here from the earnings gap, and I had been taking profits along the way. But we did have a snap here of trend. You can see from a lower high, and we've just been kind of bear flagging lower. We're at the 61.8 fib. This 39.63 is a really important level. It's also close to this gap fill, which comes in here at 38.59. Anything that breaks below here really starts getting a little bit more bearish. I don't necessarily think a look below this range here and it would be super duper bearish if it doesn't stick and we reverse. If we lose this gap, I think it's very possible, and I haven't heard a lot of people talk about this, but it is possible we fill up the triangle and come back down to this 29.5. I don't necessarily know that's going to happen. 35 for me is sort of more the number. It also coincides with this 61.8 and also the top of this consolidation range. I think that would be, to me, would be a spot to sell some puts or maybe nibble long if we do have the break. But it is really possible if the market does soften that we could see this 29.51. If the market doesn't soften, I think this will hold. If not, we'll come down there. If Twitter happens to look below and fail and we have some type of a reversal, anything over this downtrend line that coincides with a break into gap, and I think we fill fast up to 48. That to me would be the play. Let me take a look for you guys at Google. Google had a breakdown. I had discussed this, and we rallied back up here to the downtrend line, and we stopped right at this breakdown. I was looking for a short somewhere between here and here. That wound up working, and we're now lower. I would be on guard for Google here with the possibility that it puts in some type of a higher low. You can see here we had basically a little. This here was a bit of a higher low than here, and now if we make a higher low from this move and then take this high, then I think Google's along and probably will come back up and retest the all-time highs, or at least the backside of this prior trend line. That would be a trigger if we break over this 568.73. The next move, I think you'd see a pretty quick move up to this 577 level, and then that's kind of a wait and see. Although my thinking would be that the fact that we would be coming from a higher low and then took this high, that this probably wouldn't hold the stock all that much, and we probably would rally a bit higher. As is, though, as of now, Google is still pretty bearish and the short is still kind of in place. We held the 20 MA here. There's a lot of resistance up here with the 200, the 50, and also the 100 MA up here. So Google has a lot of work to do. Like I said, the important would be for me this reversal bar, really this reversal bar, the one that took it off trend. Anything that would negate, I'm sorry, let me revise this. Anything that negates this bar here, and the high of that bar is 566.90. Anything that would negate this bar to me would tell me that the longs are back kind of in control. So anywhere between there and here, and we'll probably see higher. I don't necessarily know if this would resist as much, considering we kind of had the flush out after that. I am, though, like I said, I'm a little bit more neutral on Google now. This was for me like a bit of a swing trade, or more of a day trade. I shouldn't say so much of a swing, but I think longer term Google, I still think bullish. Short term, I still think it's got a lot of work to do. It's a bit in jeopardy. One I had played this week that went well, and then it did not go well at all, was LinkedIn. I had discussed on the stream that I thought that this was a professional gap, because we had gapped up, we took out this dump bar here, and we held, and the next couple days we came up higher. I had discussed taking a bit of profits up at these prior swings, and then unfortunately the stock really collapsed. This was a move based on them doing some type of it's almost like a secondary. They issued some kind of a note that was dilutive for like $1.2 billion, which is like a pretty decent chunk of the float. I think that the whole market cap is like 12 billion or something. And the terms of the note structure hadn't struck me as bearish as this. This actually was a little bit surprising how much it took back. And the stock the balance wound up stopping me out, but I got out way before it got ugly. I had discussed anything below the breakout of this bar, this 132.23 was really bearish, and then I had discussed around the 226s. There had been, if you took a look inside this candle, it was a big point of contention. You can see the rally back point really just took us basically up to there, that 226, 227, and we've been meandering there. If we can break back up higher here and get back up over the gap high, I would say that this was sort of a anomaly, although this was such a bearish move. It took back 3 days worth of rally and closed well into the gap. You can see we're kind of closed above it, but I think if we lose back into here, we're in danger of filling the gap completely. So for me, LinkedIn is a little bit of a no touch here, since I don't like what the management did, and I don't like how the stock reacted. This is really kind of pattern failure and a bit of a shame. This stock really should have, if this wouldn't have happened, migrated back up and retested the all-time highs around in the 250s, and that also, as you can see, I have some channels drawn in, would have been channel chops. So when something doesn't go as I expect, I back off. I kind of just play a wait and see game. So I'm kind of waiting to see how LinkedIn shakes out. Netflix, if you take a look, has been kind of surprising. Mark Cuban had stepped in. I had played it long. I got out a little too early. I've been saying that the stock is looking kind of bullish since we're closed into the gap, and you can see we've just been consolidating. So Netflix to me is still a little bit bullish. I think if you can take the highs here, we probably will wind up filling the gap completely. I wouldn't say you buy it here just because you're in the you have 20 MA resistance and you're kind of just in the middle of the range. But if you can, I think if you could take this out, this will probably start running some stops. You probably have a move up to this to where the volume starts at the very least at the 200 MA around this 416-ish level. You can see there's no real resistance volume-wise until there, and then you start dealing with some of the volume resistance here in the volume profile. But it would not surprise me to see the gap in Netflix fill, or if we get above here for a day trade to at least play to the 200 MA. If this starts rolling over and you start losing this consolidation, maybe we come back down to retest the low, or maybe try to make a higher low. That's getting a little tricky with a momentum stock. It's going to depend a lot on the market. But for me, I would be looking more for the play back long to try to get up to that volume, that low volume, or where the volume starts here at this like 416 level, if we can take that high. So that's Netflix. Let's take a look at Tesla. A lot of people on the stream this week really wanted me to get back into Tesla and to get supportive. I did not see anything, honestly, in the chart analysis here that would get me back in. You had a head and shoulders pattern here. The stock has been making lower highs. We've been in a bit of a grind range, and earnings here could not take it over the downtrend line. It was not sustainable. And you could see the next day we opened and stayed below that area. I'm not really super duper bearish on Tesla. I was really looking for the thing to kind of wash out on earnings and come back and complete the head and shoulders pattern to somewhere around this 206.84, which would also have coincided with a 78.6 fib and also a measured move, which would be around the 203, 201 levels. So somewhere between 201 and 207, I was looking for this thing to set up for a major long. We never got that. We may still see it if the stock comes down. I would think anything up over the earnings day is really key. If we can get over this gap high and the earnings high, you can see they're roughly about the same. So set some alerts here, 246.69. I think if we can break the downtrend and get over the earnings high, I think we're in good shape for a bit of a move higher. If Netflix, if Tesla gets back above the old high, which wound up being kind of the right shoulder, this 265, then I think we will be talking Fibonacci extension type of play. I think we will test the all-time high and probably exceed it just because of the short covering rally that no one's expecting. I know the sentiment on this stock has gotten really, really bearish, really, really quick. My concern is, though, that the catalysts have sort of dried up a little bit. Elon Musk had made his famous tweet. He had talked about that new model that was coming out that is like super duper fast. And they also, in their earnings, though, delayed the Model X release. That, to me, was a huge catalyst. It's now been pushed back. This stock may have to just meander a little bit in the wilderness for a while. So let's be looking for a buy down here or a move back up over the earnings day high. If we get above there, I think the stock will have a bit more quote-unquote gas in the tank. Zillow was one I had been discussing on the stream. It's been a bit of a downtrend, but the stock has like a 30% short interest. And if you take a look where this thing gapped down, it had already been down a lot. There's a breakout low here around the 93 area. I want to show you this on the chart. It's a bit hard to take a look. You can see there's a breakout range low of the 93s, the midpoint, which is 103s, and the high, which is 111. You also had a 61.8 here, but let's not bother with that for the moment. That's not as important because it broke. But you can see we came back down into this range where the breakout was, and you had a bit of a look below these lows and failed and closed higher, and then the next day still higher. For me, the key here is going to be the downtrend line. Although if we can take that dump bar low, a high, which is 103.47, I think that on a closing basis, I think the stock can move higher just because no one would expect it. If this low gives and we come back down, I had discussed on the stream that there is primary trend line from a long ways back here down in the 85 level. Let me see if I could show you that on a bit of a longer time frame. Yep, here we go. You can take a look. The stock has been in this, it has actually not touched since back in the day. I would think that this level also coincides with some high volume and some more chop. I would think this area, it's also midpoint of this larger area. I would think this area supports. If not, there is danger down to the breakout point, which is 70. I'm not seeing that as a major danger at the moment just because of the way that this acted. It came down and then rallied back up, which tells me a lot of people were short already. But if this does start rolling over, just be in mind that is possible. I would like to see, if we're going to go higher, the stock get back up over the secondary trend line, take the downtrend and then get back up over this prior swing high, which is the 111.34, which you can see roughly is the breakout of this range. If we get back above there, I think we're talking about, rallying back up higher, because I think it's a move people wouldn't expect. As of now, this is, like I said, just kind of I had played this long. I had discussed it. I still think it's a long. I have a little bit on. I would be looking, though, to bail if we start getting back below these lows, which is the 98, let's say 98, 98s, let's say somewhere between 98.15. Let's use the second one, 98.60, because it's a little higher. If we get back below there, I think the stock is looking a lot more bearish. It should not see that low again if it on a price wise if the stock is supposed to stay bullish, at least on a closing basis. If anything above this downtrend line, I think the stock is on the run. One I had mentioned, this is just some good housekeeping. I'm sorry I didn't mention this earlier, was gold. I had done a dedicated video to it last week. I had said we had these reference lows, and we had a gap below it. And let me show you. This is an interesting setup. We had come down here, and we had rallied off the 61.8. I had said that I thought that this price action to me was still a little bearish. I had said that over this high could be a long play, but we were not long there. We were kind of chopping in the range here, and then we had the breakdown. You had these two kind of like reversal bar lows, and then a pattern failure on Friday that came back up and took you over that high and closed over that high just barely. I think gold could possibly have some more shine in the I don't know. I'm trying to come up with some kind of witty thing to say. Whatever. It can go higher. I think it could possibly fill the gap. Anything above this high here to me is bullish to fill the gap and maybe come up even a little bit higher and retest the 50 MA. Let's see what happens with this early this week. I'm just looking at the futures here. It's only up about $2, so there's no gap and go kind of scenario. Like if there was some type of a gap above this old breakdown here, I think that would catch a lot of people. I think it caught a lot of people on Friday off guard. I think that they were pressing their shorts. I know a lot of people were pressing again, and now you had a bit of a reversal here on some decent volume. The volume did not take the volume of these bars, so it might not necessarily be a good low. But if we don't get back more than half of this bar, let's say 111.78, just because that was the fib, I haven't really done the math on this. Somewhere between 111.78 and 111.66. If we can stay above there, I think that gold can possibly go higher. Any failure of this bar here to me, and more of half of this is going to go much lower, probably to retest the lows and make new lows. So let's watch those levels. That's what I'm looking at. Anyhow, thank you guys for spending the time with me for this weekend video update. Please like this video if you liked it, and favorite it and retweet it on Twitter if you're one of my followers on Twitter. If you're not, you should be. My handle is @JustinPulitzer. I will post it in the description of this video. Cheers.